Despite inflation cooling down here in Australia, there are still economists predicting no rate cuts for 2024, and there's a likely chance we don't get one till July or August of 2025. Now, if you're someone who has a mortgage, you're probably scared right now, but I want to share some insights that are very valuable and very insightful for what you can do in planning for your property portfolio journey. If you're interested in what my thoughts are, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, when I'm not here on YouTube, I am actually running a full-fledged buyer's agency. Search Property is my baby. We've been running it for almost 5 years and we've helped hundreds and hundreds of clients, ran over 1,000 strategy sessions, and bought almost $300 million worth of real estate. If you're in need of someone helping you scale up a property portfolio so you actually retire or filthy rich, then definitely reach out to us. I'll leave a link in the description box below. Now, the latest inflation data that came out was actually quite promising. It was showing that inflation has well and truly slowed down, but it may not be where the economists want them to be. And more importantly, the RBA wants it to be between 2 and 3%. Now, although the latest data from September has been a huge decrease from the previous quarter, it still highlights this need to be really committed to killing off inflation once and forever. The problem is that everything is lagging data. And when you look at something like this, I would go on to say that even if you had interest rate cuts next month, you would still see inflation drop down further. And that's because everything is lagging. Interest rate cut or hike actually takes quite a long time to come into effect. And the best way to understand this is think back to how it was when interest rates started climbing for the first time. It didn't slow down inflation, nor did it stop anyone from spending more money. In fact, what it did was it meant just more pressure on the market because interest rates were increasing, but people kept spending. And what it felt like was that the RBA's monetary policy, or the cash rate going up and down, almost felt like a blunt tool. And it's counterintuitive when you've got the RBA, the central bank, going out there and saying, okay, we're going to do X, Y, and Z. But then on the other side, which is the fiscal policy, which is the government and the budget, they come out and say, well, we're going to do the complete opposite. And a classic example of this is something as simple as the home builder package and schemes coming out, which then pushes prices up for everything. And on the flip side, you've got the RBA coming out and saying, we need to slow things down, like calm shit down, man. And so it's counterintuitive. It's the same thing that's happening right now. We have all these cost of living crisis relief packages, but all this really does is it brings more inflation into the market. The one thing that we're trying to fight against. What also doesn't help is that we're in a per capita recession, yet the markets are absolutely sending it, and that's because we have so many migrants coming into the country. Now, I'm not going to pretend like I'm some sort of economist because I'm definitely not one. But when you think about how many people are sitting there looking at the cash rate, thinking what they should do, one thing I urge them to do is look at trends rather than just the number itself. If you look at the number right now, it's within 2 to 3%, which means they should act right now. But if you see that number between 2 and 3% and it's come from 7 or 8%, you better be cutting yesterday. I know it's not a very popular take on this, but it makes you question why, despite the RBA not cutting rates, the banks are doing whatever they like anyway. The economists at the banks are coming out and suggesting that interest rates will cut a lot sooner than the RBA claims they would. And more importantly, the ones that you hold your home loans with, those banks and lenders are already reducing their interest rates. The Reserve Bank of Australia has kept the cash rate steady for a year, but that doesn't mean Aussie banks aren't moving. A flurry of lenders have been slashing their variable home loan rates as the market heats up and interest rate cut expectations near. Around 70 lenders have cut at least one of their variable home loan rates in the past 12 months. Rate City research found, including major banks CBA and NAB. Last month alone, 17 lenders made cuts to at least one variable rate. And this doesn't even consider that fixed rates have been dropping really fast. The fixed home loan rate is a very good indication of where the banks think the market will be in a couple of years' time. Because you've got to think about this. If today the rate is 6% and the cash rate happens to be 4.5%, if you go out and say, well, in 3 years' time, we're going to move our variable rate from 6.5% or 6% down to about 5%, that means they're expecting that the cash rate will go down by at least 100 basis points. And they wouldn't be doing this if they weren't confident, which means the rate cuts are going to come and they're going to come thick and fast. Now, could we see those rates drop to record levels like we saw during the pandemic? Probably not. But at this point, anything is possible. We've seen a change of government overseas and we've got some people really happy about it, some people really hate it. One of the things that we will see Trump do is cut rates. He wants to stimulate the economy. With that, inflation probably follows. In addition to that, when you've got tariffs coming in as part of their policies, it's definitely going to create more inflation. CBA was the last of the big four banks to revise its prediction, pushing back its rate cut forecast from December 24 to Feb 25, following last week's inflation figures. The move brings it in line with the fellow banks Westpac, ANZ and NAB, although they are still divided on how low rates will go. All of the big four banks expect the RBA will first cut rates in Feb 2025. CBA and Westpac are predicting 4.25% cuts by the end of 25 to bring the cash rate to 3.35%. NAB, on the other hand, thinks there will be 5.25% cuts with one cut per quarter, which will take the cash rate to 3.1% in early 26. ANZ is predicting 3 25 basis point cuts, landing the cash rate at about 3.6 at the end of the year. The CBA head of Australian economics, Gareth, said the latest underlying inflation figures were not low enough for an interest rate cut this year. The Q3 24 trimmed mean was a touch firmer than we anticipated, and as a result, we no longer expect the RBA to commence normalizing the cash rate in December 2024, he said. Notwithstanding, the disinflation process is intact, and we pencil in Feb 25 for the first rate cut. Now, one of my favorite things to look at is the Australian Property Investment Magazine comes out with a property sentiment report. They go out there, they survey a lot of people, and they go and come up with some findings. So I want to share that with you guys. How do you feel about the current Australian property market? 62% of people said positive, 24% said neutral, and 14% were actually negative. In the next 12 months, do you expect regional property prices to increase? Well, 64% said yes, 24% said stay the same, and 12% said decrease. What's really interesting is where the numbers are skewed in the next question, which is what direction do you see Australian property prices heading? 81% of people think it's going to increase. 12% say stay the same, and only 7% are saying it will decrease. Now keep in mind, the people that are surveyed are people who are seasoned investors as well as those first home buyers. So across the board, despite the fact that a lot of people are saying this is the top of the market, it's a bubble, everything's going to come crashing down, they might be doing one of two things. One, they're flat out lying to your face, or two, they just don't want to tell you because they aren't in the market yet and allocated all of their assets before they come and tell you that property markets are going to go up. I've been honest on this channel and transparent, and to be honest, it would be really difficult to make as much content as I do and completely fake it. Authenticity is at the front of this entire YouTube channel and community. It's probably the reason why you still watch my videos. And with that, I only want to be honest with you. Do I see some turmoil possibly coming in the next 5 years? Yes. What could it be? I have no idea. We still have further to go in this cycle, and although we may see one of the biggest property booms to follow in the next 12 to 18 months, it will be followed by some corrections along the way. If you're in this market thinking that the market could only go up, that is how people get wrecked. That's why you need a fluid and robust strategy so that when those things are coming, you'll be in the right conversations to know when it's coming around the corner. I remember having these conversations in 2020 with a lot of people who didn't have enough data as well as enough experience and real active experience in the market, talking to agents, talking to property managers to know when things were moving in the next 3 to 6 months. It's why so many people were selling at the bottom of the market in 2020 and got absolutely wrecked at certain points within 2022 when rates were so high and Sydney and Melbourne prices came down. But despite those markets coming down, Sydney has hit its all-time high in prices. And that is why you're in real estate, because you have a long-term vision for this asset class. If you're simply coming in here for the next 12 months, fair enough, you're probably going to make a shitload of money. But if you're someone in here thinking that you're here for the next 12 months, but in reality you're here for the next 5 years, you need to start thinking longer. You need to start thinking about the bigger picture. Because I can tell you now, if I started 11 years ago and had the thought of just flipping properties and doing in and out within the next 11 years, one, I would have lost all my hair, and two, I probably would have made a lot less than if I had just simply held and withstood all of the storm and all of the turmoil that came 11 years after that. I want to know what your thoughts are on when you think rates will cut. Let me know in the comments down below and we can start a discussion with our community. I hope you guys have enjoyed this video. If you have, subscribe to the channel and I'll catch you guys in the next one. Thanks guys.